your cash account reconciliations associated with Chapter 5. If you're in my class in fall of 2022, the problem I'm going to use is from the Quiz 2 Review Study Packet, problem number 3. If you're not in that class, then feel free to take a screenshot right now of this problem that you see on the screen, and this is the one we're going to work. So before we even start, I just want to ground you in why we do this. So remember, we've got a company, we've got a cash account that's at a bank, let's just call it Bank of America, and we've also been making journal entries to our cash account on our general ledger all month, right? When customers hand us cash, we make the deposit at the bank, we put a debit into the cash account. When we write checks to pay vendors, we put a credit into the cash account. So we've made these entries all month long, and now we've got a balance in our general ledger. And we want to make sure that balance is right. We want to make sure that the money we think we have is the same money that the bank thinks we have, right? So that's the whole reason we're doing this. We want to make sure that we've got our amount of cash right. Make sure nobody is stolen from us, etc. So it's a key control. It's a key internal control, this cash reconciliation. So the best place to start when you begin is going to be you want to get both of your balances, right? So on the right-hand side, this is where I'm going to put my general ledger information, right? Or the company books information. And so my ending balance per the general ledger, let me go up and start reading. On November 30th, after all transactions have been recorded, the balance in the company's cash account has a balance of $27,202. Okay, I'll put a little check there so I know I've taken care of it. $27,202. On the left-hand side, I'm going to see what the bank has to say about my cash account. So I'm going to look at my bank balance, right? We can assume that I either looked it up in the app or I got a statement. This says that the bank says I've got $29,279. Okay, so ending balance per bank. Now, if for some reason these two matched, I'd be done, right? I'd say, yay, the amount of cash that I think I have matches the amount in the bank, and I don't need to do any more steps. However, we can see it doesn't match. So let's take each of the pieces of information one at a time and try to figure out where they go. So the first one is outstanding checks at November 30th include check number 3030 and check number 3556. So remember, outstanding checks means that I've written this check. Entries were made earlier in the month to reflect the fact that I wrote the check. So that means that the fact that that money has, in my mind, left the company is reflected in my general ledger balance, but the bank doesn't know about the checks yet because they haven't been presented to the bank. So on my bank side, I'm always trying to see what the balance will look like once the bank catches up with things that I've done, right? So the main things it's got to catch up with are usually checks that haven't been deposited, right? So I'm going to say outstanding checks, right? And the other thing, sometimes there are deposits that are in transit. We're just not there yet. But those are the two main types. All right, so the sum of those two checks, that's $15.25 plus $14.59. Let me pull out my calculator really quick to make sure we're staying on the same page. So again, I'm taking the sum of the two checks, $15.25 plus $14.59. And what's going to happen when the bank finally processes those, right? My balance will drop, right? Because people will show up, they'll try to cash their checks, and the money will leave my account. Next, it says, included with the bank statement was a credit memo in the amount of $770 for an electronic funds transfer in the payment of a customer's account. Now, you might not be familiar with some of those terms. What that is saying is that you had a $770 deposit coming in from a customer via electronic funds transfer. Right? Any problem I would give you would be a little more clear, but I want you to know this terminology for the final exam. All right, so if a deposit was made, we didn't know about it, right? That means the bank knew about it. By looking at the statement, I found out. So I'm going to have to add that to my balance, right? So I'm going to add that EFT transaction over here. Things on this side are going to require journal entries, right? So they make sure I can write that. They're going to need entries, right? These are things I didn't know about. Going to need entries. So the fact that a customer gave me $770, that's going to require an entry in a minute. The bank deducted $67 for a non-sufficient funds check from a customer that had deposited. What that means is that we had deposited a check from a customer, right? We thought we'd have that cash. The check bounced. So the bank says, no, that check bounced. We're going to take the money back out of your account. So they're going to take that NSF check out, right? So we're going to have to update our books for that as well. Next, a deposit placed in the bank's night depository on November 30th totaled $1,675 and did not appear on the bank statement. Now, you've probably never heard this term, night depository, right? It's kind of an old school thing. If you worked probably at a restaurant or a bar and had to make deposits late night, you might be familiar with it. But it's basically a secure window for people to come and drop deposits at the bank after hours. So what this means is, on my general ledger side, I put a debit into cash for that deposit, right? I walked over to the bank, I put it in the night depository, but the bank hasn't processed it yet. So again, something the bank's going to have to catch up on as soon as it finishes processing. So when it finishes processing, right, that'll be an addition to my bank balance. Okay, we'll check that off. And then examination of the checks on the bank statement with the entries in the accounting records reveals that check 3445 for payment of a payable was correctly written for $24.50, but was recorded in the accounting records as $25.40. So what that's saying is that we've made our journal entry wrong, right? The bank has it right. The bank processed the check as we wanted them to. They took out the $2,450. But when we made our journal entry, let's think about what we did. So we made a journal entry to credit cash, right? $2,540. It should have been a credit of $2,450, right? So I've taken too much out of my cash account, right? There's too much credit. So when I have too much credit, what do I have to do? I have to create a debit for it, right? So I'm going to have to add back that error correction, right? So that error is for $90. So let me just say that again. This credit was too high. I lowered my general ledger cash account by too much. I should have only lowered it by $24.50. So to get it to the right place, I add the $90 back. All right, and again, that was my error, not the bank's error. And then lastly, the bank's like, oh yeah, here's your service charge. Darn it, I forgot about the service charge. I need to do some bookkeeping for that as well. So the service charge is my final deduction. Okay, so now let's see if we got it right. If we take the bank balance, we add deposits in transit, we reduce it for the outstanding checks that'll come in. When the bank catches up with those checks and deposits, the bank is going to say, I have $27,970. All right, I've got some general ledger work to do. I need to make 4 different journal entries. I need to add the deposit I got in from a customer of $770. I need to correct my $90 error. I need to show that my insufficient funds, the customer that wrote me a bad check, that money came back out of my account, and I need to take out the service charge. Once I do all of that bookkeeping, my bank balance will be $27,970. And now I can see, I understand all of the differences between what started as my bank balance and what started as my general ledger balance. Only thing that you still have left to do is actually to go in and record a journal entry for each of the 4 items that you see. Now, we didn't ask for that in this problem. We didn't give you enough information to make all of the journal entries. But if we had, obviously, anytime you're adding to the general ledger balance, those are going to be debits to cash. Anytime you're deducting, those are going to be credits. Last thing I will try to remind you of is adjustments on the bank side are going to be made up of 3 different things, right? We've dealt with two of them in this case. They're going to either be deposits in transit, right? Meaning that I think I've made the deposit, the bank hasn't processed it yet, right? They're going to be outstanding checks, right? I know I've written the check, I've deducted it from my general ledger, but the bank has not taken the money out of my account yet. Or where the bank makes an error, right? Those are going to be the three things that'll show up on the left-hand side. Things that show up on the right-hand side are things I need to make entries for, right? Errors that I've made, new information that I have, etc. So if you kind of use that rule of thumb, you'll get to the right place. Very last thing I want to say to you, and don't let this confuse you, but some of you may have keyed in up here, right, and said, wait a minute, I don't understand. You said included with the bank statement was a credit memo in the amount of $770 for an EFT. But yet you told us down here that when we have money coming in from the customer, it's ultimately going to add to cash, and we add to cash with debits. This term credit memo is a banking specific term, right? It is not an accounting term. Credit memos are deposits in banking vernacular. Debit memos are withdrawals in banking vernacular. Do I expect you to know that? Absolutely not. But you may see it in other places, so don't let that confuse you. What I want you to take away from this is that the customer gave us $770 through an electronic funds transfer. We hadn't known about it till we saw the bank statement, so we've got to come in and we've got to add that back to our balance. Okay, I hope this helps.